Hello, trading is closed on the 22nd of December 2022. Let's do our disclaimer, go over our calls and make some predictions. This is my trading plan for tomorrow, 23rd of December 2022. It'll be a half session, a stub as it were. Please remember, I can be completely wrong and any trade you make should be at your own risk. Look for the pattern with the early low, which is this, and tomorrow should be the pattern with the early high. We said yesterday's pattern was a negative pattern, and unless we gapped and promptly took out these highs, we should see lower prices, which turned out to be an understatement. During the day when prices were collapsing, MEJT said this drop would not stick and prices would retrace. It now says the rally won't stick. It says we retrace to 37.75.69. I think that's very likely to fail. We did hit that price right on the head here. It's still required to print again, but when you hit a target pretty much on the nose, it's called a direct hit in the MEJT system, and direct hits have the potential to lead to very large moves. Doesn't mean it won't ever be seen, but I'm not counting on it printing tomorrow. Rule or no rule. Look how hard it is for prices to stay under the lower Bollinger Band very long. It's hard to resist getting FOMO, which is fear of missing out when you're collapsing like this, but it's good to remember where you are in the long-term scheme of things, in the long-term picture. When you're down under this band, you should be looking for places to reverse, even though sometimes it might seem it won't ever happen. I still want to see us retrace to this green line. That green line is right now about 39.50. Close will be good enough for me, but I want to see us come back to 39.50. Let's remember that number, because there is resistance if we hit it. We are trying to see where the end of this first wave down is. Well, I'm calling this a cup, and this is a cup with a handle sloping down, and that's an unstable pattern. If you're going to drop and stay down, you should slope up first and then go down. When you do this and go down without sloping up first, it's an unstable pattern, and the target is to retrace all of the drop, which is back over 3,900. Now here we have a stilt. Half a diamond's enough, so we have an inverted a diamond on stilts pattern. These patterns don't have to go to completion, but when they do, you get resistance at the origin of the left stilt. So if we do gap up, look for resistance here, but the target of the pattern is to overtake this high. So if you get resistance there, I don't think it'll hold. Next question is, how should we count this? I'm calling this an A and this a B. The real question is, if this is B, this should be a three-wave structure. Now I can count it as a three-wave structure pretty easily with an A, 1, 2, 3 for A, B, and 1, 2, 3 for B. And C is equal to A. Now the alternative is to call this a five-wave structure. And I find that hard to do. That could be 1, that could be 2. Then you should be in a third wave. Here's 1 of 3, 2 of 3. To me, that's not what a wave 3 of multiple degree looks like. It should look like this. It shouldn't be corrective and overlapping. Now it doesn't make me right, but that's why I think this is a 3-wave structure and not a 5-wave structure. And 3-wave structures are corrective waves, and corrective waves retrace at some point. Well, how high could we go? Well, this could be one array, and this could be black A and that black B, and you want to have some kind of Fibonacci relationship between black C and black A. If black C is twice black A, you wind up around 3950, which is the target we had from my trend line. And it's also a 50% retrace of this first leg down. So you can see if we do get the rally, you're going to have strong resistance around 3950 cash. It's a reasonable target. Doesn't mean other targets don't work. Here's my long-term chart. I have the various targets, one of which is around 34.15. Well, what if we're in wave magenta C down, and this is black A? What if we hit B, black B, around 39.50, and then drop to my target, 34.15? Suppose that's A and we hit black B. You want to see C and A have some relationship. Well, if that's C, that is A right on the nose. Doesn't mean it's the only target, but if we do get a rally and hit 39.50, I don't think we'll get too much further than that. Doesn't make me right. We're going to sum things up, but before we do, I want to point out again these green lines, which are prior FOMC announcement prices. We had one price today, 38.05.01. I mean, that number was generated months ago, months. Look at this. First of all, we had 38.28.49. There's support, which failed. Here's 38.01.05. Look at that beautiful support. Support failed. And now it becomes resistance almost right on the nose. So it really pays to look at those numbers. And I have one number around 39.42.07, which may turn out to be close enough to be 39.50 to have some significance. But I mean, I think that's beautiful stuff. That numbers from months ago still have relevance. It's amazing. Well, tomorrow's pattern has the early high. Typically, it's a rally day with a high in the final hour. Failure is a straight line drop. Because tomorrow's a stub day, the full pattern may not play out, or it may not play out until Tuesday's open. Sentiment indicators based on put-call ratios and mutual fund cash positions are levels associated with short-term lows. The market once again was unable to maintain a close under recent lows, and even though we traded much lower, it's actually up over the last 3.5 trading days. I mean, here was the previous low, 38.21.58. We closed over that. So in spite of this collapse, over the last 3.5 days, the market's up. It's a rejection of the lows. The inverted cup, a downsloping handle pattern, targets a retrace of the entire drop. I have an unfilled target at around 39.50 cash, and the waves balance at that point. Of course, other numbers might also work. I'm looking for a rally tomorrow, though it may wait until Tuesday's open to play out fully. As always, gapping down smartly will kill the call. People trading long should be aware they're making a counter-trend trade in front of what could be a collapse next month, and they should have appropriate stops. So even though we have a target of 37.7569, I don't think it'll print. It doesn't make me right, but I don't think it'll print. And assuming this follows through, because if we gap down tomorrow, this doesn't mean anything. Assuming we follow through, I think we see around 39.50 before this rally's over, and then the whole bottom may drop out. And that's today's call.